Good day and welcome to the BizNews Edge. It's Tuesday, the 21st of July, 2026. I'm Alec Hogg. Good to have you with me. Well, later in the show, James Gubb takes a scalpel to the AI boom and finds some uncomfortable truths underneath all the hype. That's coming up. But first, Pretoria. Thursday is decision day for the South African Reserve Bank's Monetary Policy Committee. They're the guys who set interest rates for South Africa. Renewed war between the US and Iran, and it just seems to be escalating all the time, has actually kiboshed some of the more optimistic thoughts that the Reserve Bank Governor Lesetja Kganyago had. He was expecting maybe a decline in the oil price would enable the Reserve Bank not to increase rates this time around. Well, I'm afraid that has changed for a more hawkish attitude, and the odds are now pretty strong that we're going to have another increase in the interest rates on Thursday when the Monetary Policy Committee makes its final statement. That would take us up another quarter point, 25 basis points, to a repo rate of 7.25%. Right, after that, let's get you up to speed on the news that's been moving markets this morning. And we start with a name that's had a stellar few weeks, and one that quite irritates me that we sold it out of the BizNews portfolio a little while ago. And it irritates me even more when I was listening to what James Gubb was saying about the AI boom and where the money is to be made by investors. I'm talking here about Sasol, and Sasol's latest business update covering the year to the end of June was released on SENS this morning. It tells a genuinely encouraging operational story. Forget about the oil price helping this company. The operations is what Simon Baloyi, the chief executive, said that the management would be focusing their attention on, and they're making excellent progress. Simon, by the way, is one of a star-studded cast who are going to be in the Drakensberg for the BNC9, the 9th BizNews conference. It's August the 11th to the 14th. There are tickets still left, so come along and join us. Well, unfortunately, the share price did not give the reception to the Sasol numbers that they warranted, but that's just because Sasol has been on a little bit of a tear in recent weeks. Secunda, the big plant here in South Africa, has delivered its best production year in the last 5. And then the international chemicals business, that's the one that went through such a rocky time in the Lake Charles factory in Louisiana, settled down pretty well now. That actually beat its own guidance to the investment community. So all around, things are looking up for Sasol. It's a company that not long ago, remember, was fighting for its life, but it seems to have found its operating rhythm very much so again. The market's reaction, well, is more about timing than substance. Sasol shares have been up 16% in the past month. So this morning's update, good as it was largely already priced in. We saw an early pop in the shares, but then profit takers stepped in and pulled the stock back by a few percentage points by midday. My readers, don't mistake a breather in the share price after a strong run as a change in direction. The real test, though, comes on September the 1st. That's when Sasol will be releasing its actual results for the year to end June. And the big story is going to be how well it has achieved deleveraging. In other words, paying off the debt that was in the balance sheet, the debt that got many investors really concerned. Another big one reported some information this morning, and that's the Green Bank, Nedbank. It gave us a formal seal on a deal that we've been tracking since May. It's the move into East Africa by Nedbank, one that's been applauded by the investment community. The idea there was to take a controlling stake in Kenya's NCBA group. Big banking group there, big deal for Nedbank. Well, shareholders in NCBA have given it the thumbs up, and it was reported on Sens today that close to 80% of them accepted Nedbank's offer. That puts Nedbank's controlling interests very comfortably, about 2/3 of the new bank that it owns, and it'll settle it mostly in cash, which is a good thing for Nedbank shareholders because the dilution is going to be relatively small. Only relatively few number of new shares to be issued. It'll expand the equity of Nedbank by under 9%. So a company that it's bought in that should produce a lot more than 9% of the profits in future, a modest price for genuine growth footprint outside of our pretty slow growing South African market. The stock market, investors, traders, call them what you will, they kind of shrugged at the news though, and that's actually a compliment here because it was priced in months ago. There's been no drama. Nedbank's shares barely moved while the rest of the banking sector had a soft day. So it was kind of in line with what happened. But this is good news in a way. What I like about this one is the discipline. Nedbank has bought its way into a faster growing part of its catchment area, the African continent, but it hasn't stretched its own balance sheet. NCBA could be a real jewel in the crown, as we've seen for Standard Bank, the way that its African operations have performed. And the same thing is happening now with ABSA as well. It's the kind of expansion that I'd like to see more South African corporates, particularly those outside the banking sector, pursuing. And now for the report that hurt. Kumba Iron Ore's trading statement this morning was ugly. Earnings down by around a third. Headline earnings per share down closer to 40%. It's a genuinely painful set of numbers. And the market didn't hesitate, sold the stock down hard throughout the morning. The causes, though, are worth understanding rather than just wringing our hands at the bad news. The rand strength, up 11% in the half-year period, has hurt Kumba in a big way. It hurts anyone who sells dollar-priced commodities into the export market. And then on top of that, Transnet's rail network, which has let the country down terribly over the last few years, resulted in, another shutdown in May, and that hurt Kumba too, both in production and sales. You can't keep producing if you can't get it to market. My goodness, I hope somebody actually is listening. But it does appear as though Kumba is going to benefit from the changes that we're seeing in Transnet at last, and the privatization, in a way, with some of the Transnet lines going to the private sector, should be a huge boon for this company into the future. A decent business being held back by infrastructure that can't keep pace, and a currency that no one at Kumba can actually control. Currency is strong, and that's good news for a big part of the company. But if you're a Kumba shareholder, maybe not so big as if you're in that shoes. But the story here, big, is that on the 28th, we've got the financial results coming out from Kumba. I suspect they're going to disappoint. And the big thing there, of course, is the dividend. Kumba offering a juicy dividend, or certainly it did. Well, on to our anchor story for the day. And there's a mania playing out in markets around artificial intelligence. I don't need to tell you that, but I do need to tell you that we've found someone who can actually give us the kind of insight that we all need on this. James Gubb has spent a career separating genuine value from a good story. And right now, AI is a good story, but is there genuine value? James is a chartered financial analyst. He's a former top-rated South African money manager. He now lives in Plettenberg Bay. He has retired. He surfs. He has fun down there, and he allows his active mind, as he described it, to look into areas where he can understand more. And right now, we need to all understand artificial intelligence and the boom that we're seeing there in a whole lot more detail. He's also spent a lot of time, as I have, reading a book called Engines That Move Markets. Now, if you've attended any of the BizNews conferences, every time I refer to this book, it is a analysis over centuries of the kind of booms that we are seeing right now in AI. It goes back to each one of them, from the internet boom more recently to railways, to telegraphs. And every time there have been some parallels that we're now seeing. And James applied that as well in a wonderful report that he's compiled, which we have published on biznews.com. So you can go along and read that one. But before you do, have a listen to this conversation, because it's quite a sobering one. We spoke here about Oracle's credit downgrade, which came out yesterday, why data centers being built today are actually, relatively speaking, bigger than the pyramids. And you can imagine in the ancient world what an incredible investment of time, energy, and resources the pyramids were. Well, we're doing even more than that, as James shares with us through his analysis, and also who the likely winners and losers will be of the AI boom, where he's actually putting his own money. Here's highlights of the conversation. You can get the full interview on the director's cut on biznews.com, or if you remember, on YouTube. Yeah, and it really is a reminder, I guess, for those of us who've been around a little while, of what happened during the dot-com boom and then the dot-com crash. And of course, we had the global financial crisis in 2008. And you make a comparison between those two, which was very interesting. This isn't, and just explain whether you see it and how you see it, rather as a global financial crisis issue than a wham-bam crash.
Yeah, I mean, we were just trying to look at what the capex spend has been, over history. I was actually trying to see how big is this capex spend relative to the spend on the pyramids? Because I mean, I really think it goes back that far. In commercial history, I suppose the dot-com boom was the biggest. Have you ever seen the size of some of these data centers that are being built? They are utterly extraordinary. And they're not just one of them being built. Plans for 100. Yes, there's a lot of red tape on the way, but it's pyramid level. It's pyramid level.
For those who haven't seen the size of these data centers, just explain the size or the scale of them.
I can't give the exact. It's just go and Google it. I mean, the base of it is the size of Giza pyramids.
So it is a huge, huge thing. And of course, you got Elon Musk on the other side saying, I'm going to build them in space because it's much more efficient and so on. So there are all kinds of side angles. But when you say comparison with the pyramids, you're taking, I presume, at that stage in mankind's development, they were off the charts, bigger than anything else. And it's a similar thing here.
Yeah, I mean, there was a whole debate around when it was actually built, but I mean, assume around 6,000 or 7,000 years ago. Yeah, I'm just trying to give scale and context to what's actually happening to us now. It's massive. It's massive. It dwarfs the dot-com capex spend on fiber, et cetera, which GDP adjusted around 4 times that. And we all remember what happened to the dot-com in the end is that they overbuilt. Just like they overbuilt the railways. This capex build doesn't come with a history that suggests that the spend is rewarded handsomely. It's rewarded handsomely to the people that buy it from the originators that eventually go bankrupt.
Is it a little like in property cycles? Time and again, you find that people invest heavily right at the peak of the property cycle and then spend a few years trying to get people into those offices or industrial sites that they build.
There are lots of areas within AI that you can invest in. But no, okay, so I'm going to go slightly tangential to this. In the end, um, where would I put my money? I would put my money in energy because the cost of compute through massive competition that we are seeing um, is going to reduce to the level of the cost of energy plus the amortization of silicon or depreciation of silicon. So, in the end, the bottleneck is going to sit at the energy supply level. And, and that's where I'm putting my money because the ratings on those stocks are of derisory. In terms of opportunity, I wouldn't necessarily look at the current AI froth. You've got to be a proper specialist in that area. Maybe something like open routing is an area that I would invest in. CoreWeave is an example, but investing in energy is where I'm putting my money.
So just elaborate that there, James. From a South African context, we know Sasol is an energy company. Would that rate?
Yeah. I mean, I'm thinking more nuclear. I'm thinking more nuclear. But yeah, just common old energy suppliers. If this exponential trend continues over the next 10 to 15 years, then the demand from these data centers actually makes a difference. Right now, it's utterly immaterial. The next 3 years, 5 years, almost immaterial. But in years, if this growth continues, year 7, year 8, year 10, year 12, you suddenly having a material increase in demand just from compute, the power requirements. And remember that in order for you to be able to start a new power plant, and nuclear still seems to be, to me, the greenest way to do things. That takes 10 years, 12 years, 13 years to develop. So there's going to be a massive gap and massive demand when it's just simply not supplyable. That's the end result of I think of this AI wave, and one of the smartest ways to play it is through that bottleneck.
Just to understand this, then, we've got on the United States side or Silicon Valley side, we've got the development there of Claude. We know Claude, which is seemingly superior to ChatGPT, which was the pioneer, the first one that the retail market knew. And you've got Gemini from Google. And there are others, but those are kind of the three big brands. But the Chinese haven't been sleeping. And so we have DeepSeek and now Moonshot, which is supposedly better than DeepSeek. And all of that is going to make it more difficult if you happen to be coming to the market as both Claude, Anthropic, or OpenAI, which is ChatGPT, are supposedly doing in the near future.
Correct. The Chinese are certainly not sleeping. Yes, they've been somewhat stymied by chip access, top-end chip access, but they've just got smarter. This whole thing gets eroded from the bottom. Again, I go into in the note in quite detail of why it gets eroded from the bottom. It's because these top-end products get eroded from their previous iterations that don't go away. They still do a lot of very, very good work in terms of making your companies more efficient. And they do a large chunk of it at a tenth or even 100th of the price. And so I just don't think it's sustainable, particularly when you've got competition from China. That has also got an energy advantage over the US. I mean, that's a longer term issue. But these Chinese are throwing money at AI at the moment, and quite perversely becoming the champions of free speech, of open weight models, releasing it to the world, whereas the Americans are trying to stop all of this. In fact, there's been rumors this week, I've just heard about it this morning, of the government banning open weight models from China. If that's the most stupid thing I've ever heard in my life, but if they do that, America is going the wrong way, exactly the wrong way. Just another thing quickly, Alec. Again, I saw this last night. The scale or the rate at which these models are being released, we kind of used to like one a quarter or so. The question was posed, at what point in time are these frontier models going to be released at a cadence of around one a day? Any idea when that's going to be? And the answer came, January. In 7 months' time, we will be most probably looking at a release of frontier models. These are top end models at a rate of one a day.
But then surely,
this is what exponential stuff does. I mean, it just boggles your mind.
Yeah. Well, exponentiality is, as you said earlier, it's very hard for us as human beings with a linear kind of framework to understand that. But from what you've said now, if I'm a banker and I'm going to lend to these people, I'm going to lend to Anthropic, who own Claude, and they're top of the pile at the moment. But my goodness, with the competition that's coming, I might be thinking a little bit cautiously about how much I lend to them. ChatGPT / OpenAI, already we've seen some restructuring there from Microsoft. Can you just explain to us what's going on there? Because it's almost like Microsoft is saying, hang on, we're not so sure ourselves anymore.
No, they're not. They're conserving their cash as best they can. They're kind of sidestepping the obligations of these hyperscalers, just like Apple has. They're kind of exiting, and exactly what they're going to be doing in the future, I'm not 100% sure, but they are certainly trying to reduce the potential liability that they have in terms of spending money on new large language models.
And well, that's a big signal, because if anybody knows, they've been backing OpenAI from day dot, and now they're stepping away from it. They've got obviously huge insight, incredible insight, far better than the rest of us have. And I suppose there's a big signal.
Agreed.
What about the postponement of the OpenAI listing? It was supposed to be with us already. Then it's apparently now being postponed from this year to next year. What does that tell us?
Well, it's fairly obvious. They are not able to raise the capital at a valuation that makes commercial sense to them.
That was James Gubb, and I don't think that you're going to look at the AI story quite the same way again in future. The idea that real money will be made not in the flashiest AI names, but in unglamorous energy suppliers that will end up powering all of those data centers. That's the one that's stuck with me, and hence my irritation that we sold Sasol out, or rather didn't keep it in, when we went across to the Ricardo portfolios. It has done so well for us on a couple of occasions on the portfolios in the past. And let's just wait maybe for a little pullback after the financial results and maybe the oil price coming back a little bit before adding Sasol to the portfolio. But long term, man, I like that. And as mentioned, come along to the BizNews conference. You can rub shoulders with the chief executive of Sasol and hear the latest inside story there. Well, that's the BizNews Edge for today. Thank you for spending your time with me. Head to biznews.com for the full James Gubb interview. It's in director's cut. And you'll also pick up all of today's market coverage and everything else that the tribe needs to navigate in these markets. We've also got the latest news that means anything really here and abroad. I'm Alec Hogg. Until tomorrow, cheerio. In uncertain times, good information is priceless. The BizNews Conference is heading back to the Drakensberg. Join me, Alec Hogg, from the 11th to the 14th of August for BNC 9, Champagne Sports Resort, where it all began, and where our community gathers for honest conversations, smart investing insights, and direct access to some of South Africa's sharpest minds. Come and rub shoulders with the best we've got. 28 keynote speakers, 3 days. Seats are available now. Book your seat by clicking the link in the description. Start your day a step ahead. BizNews Insider. It delivers the business stories that matter every morning straight to your inbox. Sharp, fast, and free. Subscribe now.